Good afternoon, everyone. Hope you're all doing well. Looks like we got a good crowd and more people signing in by the minute. We put ourselves in one amazing market the last 6 weeks. Have been pretty fun to be invested.
Hey, Floyd. Merry Christmas.
Hey, George, thank you. Merry Christmas to you, George. Hope you're doing well.
Let me ask you a quick question. When was the crossover date for TQQQ?
On the weekly, I believe the date was November 3rd, I think. I got in on November 1st because I was watching the daily chart, but I think November 3rd was a Friday.
And you usually get in at end of day?
You don't have to wait to end of day. If you're looking at the price charts and looking at Stochastic, that's why I got in on November 1st because it looked obvious. And I was taking a little bit of risk, but on November 1st, it looked like we were going to get the buy signal on Friday the 3rd. And so you can watch what's happening with the market and decide if you want to wait till the end of the day or not, or get in earlier. Hope that answers the question. So there was quite a few stocks and ETFs that were breaking out from about October 28th to November 3rd. So there were a lot of opportunities to get in at that time.
Yeah, especially Nail.
Oh, yeah. Nail had an incredible day today. I think it was up 13% today alone. And since October 26th, I think Nail is up more than 100%.
Well over 100%.
It's just amazing. So you got Nail and several others that have done spectacular. You just have to be real careful with any of these leveraged exchange traded funds. And ahead of time, you need to have in place what you're going to use for sell rules. Like we're using the stochastic crossover. Others may want to look at when it crosses a particular moving average or a percent down, because there will be a time, we don't know when, within the next 2 or 3 days to 2 or 3 months, when these probably will have sell signals. So you just have to be nimble and ready to pull the trigger. When you get the signal, you have to say, okay, that's my rule. I'm going to sell. If it turns out it's a head fake and the thing turns around and goes higher, you can always buy it back. Bill O'Neill has said that some people hang on to whatever they're trading because they're afraid of what the tax implications may be in a taxable account. He says, just keep waiting and you won't owe any taxes. Meaning he's going to keep going down. So we have to realize that these things are fun going up, and it's nice to watch the action, but they go down faster than they go up typically. Okay, well, I've got 6 o'clock. I'm going to wait till 6:01. We've got 32 that have joined us so far. I'd seen that there were 101 that have RSVP'd. We're only going to wait just for a little bit. I like to get started on time, and thanks for everyone for joining us. I'll bring up the agenda shortly. Good to see you, Rick.
Good to see you too, Floyd.
Do we have Gary? Is he on yet? Gary, are you there?
He just texted me, so he's around somewhere.
Hopefully our guest speaker will be signing in shortly. I'm looking at the list.
Yeah, I don't see him yet. Help you.
If Gary isn't here, Rick, you'll give his presentation, right?
Sure.
Oh, we'll have George do it.
No.
That's not the right answer, George. Okay, well, we got 35 with us, and it's 6:01, so I'm going to get started. Welcome, everyone. Thanks for joining us tonight. We've got, provided that we can get Gary to sign in here shortly, he's our guest speaker, and we've got a really interesting presentation using a service called TradingView. And Gary has reverse engineered everything that Rick and I have been doing for quite a while. You will have the opportunity to access TradingView, hopefully at no cost, and look at various time periods you want to back test and look at when we get our next sell signal, for example, on TQQQ. So let me share my screen and we're going to look at our agenda. Here we go. Thanks, Rick. Hopefully everyone can see the agenda, right? Welcome, everyone, and I'd like you to look at our disclaimer. Everything we're doing tonight is for educational purposes only, and we're not in any way intending anything we're saying tonight to be interpreted as a recommendation to buy, sell, or hold. All investments are at risk. There's a possibility of losing money. Each investor must be willing to accept this risk without blaming anyone. Glad to have everyone with us tonight. We're going to launch our first poll as we get into the program. We'd like to know where you are tonight. So go ahead and just click on, we've got all the various time zones, including Canada and other, if you want to be considered for someplace other than those, but it'd just be nice to know where our folks are.
And Gary is with us now.
Okay, we were going to make Rick give you a presentation.
And that was going to be trouble. You're on mute, Gary.
You just need a couple more of you to sign in. Let's see. I'm going to wait about 15 more seconds and then we'll end the poll. We have 41 attendees so far. We had 100 RSVPs, so we may have some coming in a little bit later. I'm going to end the poll and share the results. I'm assuming you can see those results now. There's no one from Alaska, and I didn't fill out the poll myself, but I know we've got people that are up here and they're active investors. We've got 46% Pacific, 6% Mountain, 14% Central, and 31% there on the East Coast. And we have one person from other. If you don't mind unmuting yourself, where are you tonight?
I am in China.
Did I hear China?
Yes.
Well, welcome, and hopefully you enjoy what we're doing tonight and that we provide things that are meaningful for you. So thanks for sharing and letting us know. The other thing I wanted to do, and what I always recommend everyone do, is look at the big picture every day the market is open. Can you see the big picture?
Not yet.
Okay, let me go back. I need to redo this. Can you see the big picture now?
Nope, not yet.
Did you share?
Sure thought I did. Let's try this again. You guys are dealing with a 75-year-old man here. We've got the recording going. I was doing a little test run today with Gary, and I lost my internet. That hasn't happened to me before. If I lose the internet, Gary, I need to make you co-host right now. Gary will continue on, but if for some reason you lose connection, just use the same link and dial back in. Hopefully we don't have any disruptions tonight. Okay, let's go to the big picture. Let me know if you can see that.
No.
Not yet.
Okay, let's try one more time.
You chose the share screen, picked up a particular screen, and then hit OK. There it comes.
You got the big picture now?
Yes. Big picture.
Okay, so I recommend everyone that's an active investor that wants to follow Bill O'Neill's system for trading stocks, you should subscribe to IBD, and each day at about maybe 1 or 2 o'clock East Coast time, maybe about 4 o'clock Alaska times, so maybe that's 5 o'clock Pacific time. The big picture comes up, and there are different folks that write this. This is Scott Letherton, and oftentimes about 4 or 5 people that write this. It says the stock market, where small caps lead stock market gains, 2 chip leaders, Netflix, nearby points. Stock market extended Wednesday's Federal Reserve fueled gains as small caps led the major stock indexes to additional 2023 highs. Thursday, the 10-year Treasury yield tumbled below 4% for the first time since July. Small caps have been laggards and haven't done so well so far this year, but they're trying to catch up and make up for it now. Stock market leader Applied Materials, IBD leaderboard stock ARM Holdings, swing trader stock Netflix are stocks to watch in the ongoing uptrend. Initial jobless claims unexpectedly dropped to 2,000. They were expected to rise to 223. Also, Commerce Department said November retail sales rose 0.3%, handily topping estimates of 0.1. Retailers had a decent start to holiday shopping. And you'll notice that we always have the market pulse is also shown here. And I think we went to the confirmed uptrend on November 1st. So we've been in a confirmed uptrend now for approximately 6 weeks and only 2 NASDAQ and 1 S&P 500 distribution days. And you can see the name of the stocks that were leaders up in volume and leaders down. And so it's good to review the big picture and market pulse every day. Stock market rose modestly Thursday as Dow Jones Industrials climbed 0.4% to hit another all-time high. Yesterday was a strong up day after the Fed chair basically said we're done raising interest rates. I think they inferred potentially 0.75% to as much as 1% rate decreases are expected next year, which is helping fuel the market. One thing you can do when reading the big picture is go to this little short video. And I think what I have to do when I share, I believe I've got to go through and click a button or share sound. There it is. I'm going to share sound and I'll just do a short segment of this video. And with sound coming through?
Yes.
Good afternoon, everyone. It's Allie Corbin-Kenshreve here with a breakdown of the action in today's session, Thursday, December 14th, where we saw notable strength again from small cap stocks post-Fed. So a lot of interesting action underneath the surface once again today, Ken.
Yeah, no doubt about it. I mean, really, the action was in small caps. The rest of the market didn't really move a whole lot, but a lot of good movers, just like we saw yesterday. So let's take a look at a rare Dow stock. We don't look at Dow Jones stocks too much on this video, but take a look at American Express, which is joining in that financial rally. Also want to take a look at Flowserve, FLS, and finally, Datadog, DDOG.
Okay, we'll get to those 3 stocks, but first let's take a look at the major indexes. We'll kick things off with a chart of the Russell 2000 small cap index surging today 2.6% on the heels of a big move in yesterday's session, up 3.5%. So just an eye-popping move in 2 sessions here. So the Russell 2000 now very close to the 2000 level on this index, hitting a little bit of resistance there. But if you put that in context of where it's come from, how quickly, Ken, this is pretty interesting here.
Yeah, it is. It's made a powerful move, and you've got that resistance level highlighted there. So it may pause and digest gains a little bit here. Like you said, up 3.4% yesterday, up big again today. We've been talking about this expanding breadth in the market, and certainly small and mid-cap stocks have joined the party here. A lot of people still asking questions about the Magnificent Seven. Can they still lead the market? And that's kind of a question mark right now, but really good to see small and mid-cap stocks gaining gusto here.
If we're seeing a little bit of rotation out of the Magnificent Seven type stocks, at least on a day-to-day basis, we don't know if it's short term or how long that kind of rotation is going to last. But if you look at a day like today, it may not be a bad thing because we've been saying how we want this to be a broad-based rally. Seeing the small caps kicking it into high gear and on the verge of a critical long-term level, could this lead to even higher prices, kind of that snowball effect potentially, Ken?
Yeah, quite possibly. A lot of things are going right in this market right now. We've seen a nice expansion in breadth on the NASDAQ. Breadth was a little better than 2-to-1 positive. On the NYSE, it was more than 3-to-1, almost 4-to-1 positive at last check. So yeah, it really has been a while since we've seen this much strong action underneath the surface. And we talked about the really good follow-through days that we saw for the NASDAQ and the S&P 500 November 1st and November 2nd. That turned the market into a confirmed uptrend. You know, indexes really haven't looked back, and we're just seeing a lot of positive action underneath the surface, and got a pretty dovish Fed statement from the Federal Reserve yesterday. So things look pretty good here.
No, I think we lost the video here. So I'm going to stop that. You can watch the stock market video every day. In addition, like I said, when you read the big picture. So that's something I recommend you do just to stay on top of the action that's going on. The other thing I'd like to show just briefly is those of you that subscribe to Market Smith, there's a pretty good feature in Market Smith. Let's see if we can bring that up. We're hung up on, I'm gonna try this again. So let me know, are you seeing Market Smith?
Yes.
Thank you. So you see this orange rectangle? If we click on that, there's an interesting thing called the relative strength line blue dot. Stocks building a base or breaking out while the relative strength line recently hit a 52-week high. So if you click on this, you will get a list of all the stocks. If you click on the number one stock and come over here and hit this little window, all we have to do is hit the space bar. For example, here's Owens Corning, manufactures building materials, glass fiber, reinforcement, etc. So you see that it gapped up and was up strong during the day, and notice in the after hours it shows it's up another 5%. The next one on the list was Phototronics. Notice it had 2 gap up days back to back, including today, up 10% today. Here's one, MyTech Systems offers mobile application software development toolkits. And so there's a gap up. Eagle Materials, another material company. LECO, Lincoln Electric, gap up. And here we have E Plus provides information technology management products. Now, that's not a gap up, but notice you can see right here is the relative strength blue dot. And notice we got about 12 days up in a row. So this E Plus seems to be something, the volume is pretty light though, only 107,000 shares, but something's happening. And then you have Bell Fuse, Trex, which makes and manufactured wood products, Inpro, manufactures sealing, engineering, and engine products for petrochemical, paper, automated markets. Every day you can go to that orange rectangle and pull up various menus they have. Builder's First Source. I'm not going to go through all of them, but here's a semiconductor one, an XPI that had a very good day today. Fortune Brands provides home security, kitchen and bath products. So you can see it's not just tech stocks. Here's a housing stock, Century Communities, very strong day today. Advanced Drainage Systems manufactures thermoplastic corrugated pipe for construction. GMS distributes interior construction product. Golf Design manufactures and distributes golf products and related accessories. If you are a Market Smith subscriber, I recommend that you go to these open stock ideas and you can say like there was 18 stocks breaking out today, 19 are pivot point, recent breakouts. We were looking at the blue dot stocks. There's a lot of power here. So one thing I wanted to share with you was some information I was able to get my hands on a FANG stock. So are you seeing my screen now? They're showing the top LETF holdings. You see that? Yes, no?
Now we're still seeing Market Smith.
Okay, let me go back and share the screen again. Tell me if you can see it now.
Yes.
Yeah, we see your slide deck.
Okay, so let's go to, so I thought one thing that might be interesting is those of you that have been trading or studying leveraged exchange traded funds, I went to their websites and I found the top 10 holdings for TQQQ, which is the triple up NASDAQ, SOXL, which is the triple up semiconductor, TECL, the triple up technical stock, and FNGU, which is a triple up FANG stocks called FANG Plus. It might be interesting for you to study that there is some overlap, but the holdings are quite different between these 4 different leveraged exchange traded funds, and these are ones that have decent volume. This meeting is being recorded and you'll get a copy of the recording and the slides. I noticed that SOXL was making a pretty big move. I did a deep analysis through a spreadsheet and looked at FNGU, SOXL, TECL, and the TQQQs and said, in a typical year, how often does one of these funds go up anywhere from 10 to 18%? You'll notice that on this 10% bracket, FNGU can go up approximately 10% in one day, 10 times a year. Notice that TQQ, instead of 10 times a year, only goes up about 2.5 times a year, 10% in one day. If we come over here to 18%, which is pretty rare, FNGU does that maybe one time a year and the others do much less than that. But I thought it might be interesting for you to see the characteristics of how much these leveraged exchange traded funds can move in one day. And I have a second graph that shows on the negative side, how often can they drop 10 to 18% in one day. So FNGU, about 12.5 times a year on the average. And this is for the entire trading history, not just in 1 or 2 years, but the entire trading history of each of these funds. And notice that a 10% one-day drop for TQQ maybe happens about 3 or 4 times a year. And so I put a slide together that has both of these on the same slide so you can sort of do a comparison to see how much up or down these funds can move.
So your graph, like we look at the one on the top, the upside gain. So you say it's like 4%, like 10 times a year for FNGU.
Yes?
So that's 10 times per year, just hitting 10%. And then at 11% is 3, or is that 10% and up? And then 11% and up? Or is that just like 10 from 10 to 11?
No, what I did is I force ranked all of the percent gains, say for the 3,000 days that it traded, and I just went up the spreadsheet. And so when I got to the 10% number, that included all of the gains larger than 10% also. So 10 times a year, FNGU will go up 10% or more. If you look at the 2% mark, which is about a 12% daily gain, you can see of those 10 times a year that FNGU went up 10% or more, 5 of those were when it went up 12%. So does that answer the question there, Rick?
Yep. Yeah,
Okay.
exactly.
Yeah, so I just did a spreadsheet and force ranked the percent changes. And then I've had a few people ask questions about FNGU, which is an exchange traded note. I called the Bank of Montreal, and I finally got to a person, I think he was in Chicago, that actually knew something about FNGU. Turns out the Bank of Montreal sponsors a lot of leveraged ETFs. They referred me to a company based out of Florida called Microsectors. I called Microsectors, and to my surprise, the guy called me back the next day and talked to me for probably 15 or 20 minutes. I learned that the Bank of Montreal has what's considered an unsecured debt on an exchange traded note like FNGU. Bank of Montreal has a AA credit rating and is considered one of the top Canadian banks that have offices in the United States. Microsectors acts as an investment advisor to the Bank of Montreal or FNGU and other leveraged ETNs. I just learned from IBD Live yesterday that the Bank of Montreal is sponsoring XXXX, which is S&P 500 times 4. And XXX is not being managed by Microsectors. I think a different company is doing that. So that's a brand new, I think it IPO'd yesterday or the day before. So I think that's the first 4 times leveraged ETF. But getting back to FNGU, it mimics an index called the FANG Plus Index. FANG meaning Facebook, Apple, Netflix, and Google. The FANG Plus has some other high techs, but it's the FANG Plus times 3. The inverse of FNGU is FNGD, meaning that if the market is going down, FNGD gains value. But I did learn that FNGU only deals with 10 tech stocks, so it's very, very concentrated, whereas TQQ, I believe, is involved in the 100 largest NASDAQ stocks. FNG only trades in 10 stocks, and they don't rebalance very often. And those 10 stocks are Meta, Tesla, NVIDIA, AMD, Netflix, Apple, Amazon, Snow, Microsoft, and Google. It IPO'd in 2019, trades an average of 2 million shares a day. The guy at Microsectors emphasized to me, he said it's perfectly fine to hold FNGU more than one day, but you have to have really strong and tight buy and sell trading rules, which is what all of our whole philosophy here is these leverage ETFs are definitely not meant to be buy and hold. So I thought you would be interested to know about an exchange traded note, whereas TQQ, SOXL, and TECL are exchange traded funds, and they are backed by actual ownership of either funds or derivatives of the funds. So there's a little bit of nuance there. I just thought I would share information about FNGU since a few people had asked me about that. I know at least one or two of you, and maybe more, have traded FNGU or maybe even currently hold FNGU, which has been doing pretty well, actually. I wanted to get into poll question number 2. And we have 53 people with us now. So poll question number 2, what is your investing experience? Beginner, intermediate, advanced, expert. And I have word descriptions by both of those. So if you look at that, there's no wrong or right or wrong answers. It's just Rick and Gary and I, we just wanted to get a sense of maybe the spectrum of experience we have across our group here. And so feel free to click whatever button seems most appropriate for you, but it'd be very informative to us to see, and we'll share the results with you shortly. So we got
Untitled.
what's that?
You have an untitled question number 2 there at the bottom.
That was there by mistake, and I didn't know how to get rid of it.
Okay.
That was user error on my part. So we've got 78% of you have voted so far. I'm going to give it about one more minute and we'll share the results. It's very interesting to see the results on my screen, and you'll be seeing it here just then. We got 90% participation. So thank you for 90% of you doing that. So I'm going to end the poll and share the results. So hopefully you can see that 13% rate themselves as beginner, 7% intermediate, 24% advanced, and 7% or 3 people expert. And so we've got about 31% as advanced expert. About half of you are rating yourself as intermediate. Thank you for answering the question. And I think all of us are on a learning curve, and no matter which one of these we clicked on, we're still studying and learning and wanting to do better. I'm going to stop sharing now on that one. I think I've got one more poll. Let's see. And this question is, what is your investing focus? You can click as many of these as you want. You see that? I've launched it. It's stocks, exchange traded funds, mutual funds, or options. So you see that one, Rick?
I don't see it. No.
Poll,
Anybody else?
see it?
No.
Let's go back and try this again. It's not letting me launch. I wonder what is going on here. It says a poll has been launched. Oh, maybe I have to end. Okay, I ended your investing experience. I ended where you are tonight. Investing experience, I'm going to launch and then I'm going to end it. I think that's what's holding us up, is that one says it hasn't ended. Let's try investing focus and see if I can launch this one. It's not letting me do it, so I'm not going to worry about it. We were just asking people what their experience was with stocks, exchange traded funds, mutual funds, and options, but it's not letting me launch that one. So I'm going to stop trying that one and see if we can launch one last. I don't know, Gary, this is not letting me launch these polls. I don't know why. Maybe I'll close it out and start one more time and then we'll stop trying if it doesn't come through.
Did you close out the second poll before launching?
Well, what I'm going to do is I'm actually, let's see, view results.
I'm just taking a shot in the dark here.
What's going on with that? I wonder if I have too many things going on at the same time.
Did you try backing out of it?
Yeah, I shut the whole thing down and relaunched the whole poll window.
I'm still seeing it on my screen. That's why I'm asking.
Oh, you're still seeing it?
Yeah, every user has to hit close to get rid of their thing.
Oh, yeah, just hit close, I guess.
Well, I'm saying that because I have a back button. I also have a stop sharing button on the poll. So
That's right.
maybe if I back out.
You're a co-owner there.
I'm just going to stop. We're taking up more time than I wanted to. So what I'd like to do now is introduce Gary Taylor. Gary and I did our first Zoom call, seems like over a year ago. And we were talking about the TQQQ and stochastic strategy. And then more recently, Gary and I have been communicating very frequently. And we've had Rick also involved with us. And what Gary has done is he's taken on the challenge on his own to use a service called TradingView, and he's reversed engineered all of my trading rules and reversed engineered all the work that Rick did in his spreadsheet backtest program, and has come up with a pretty amazing tool potentially available to all of us. Gary, I've made you a co-host, and why don't you take over, tell us a little bit about yourself, and it's your baby.
Okay. Can you hear me okay?
Yes.
Great. As you can tell, I'm talking to you from the International Space Station. Right?
Yeah.
I even have my NASA shirt on today.
Oh, great.
Anyway, I'm a little bit of a science and space fan, so it seemed like an appropriate backstop for my talk tonight. As Floyd mentioned, I started working with him early 2021, and frankly, I was amazed at the progress he was making with these backtest results using the leveraged ETFs. So I started talking to him and looking at what he had done, and I started trying to do some of my own Excel spreadsheets, which I've never been very good at. I've always struggled with Excel. I mean, I can do the basics, but I certainly can't do anything advanced like our guru Rich can. But I wanted to see how far this would go, and I thought it was a very interesting line of thought pursuit to see if we can improve the results for investing using leveraged ETFs. I've been using TradingView as one of my trading platforms now for about 3 years. I am by no means an expert in TradingView, but I know a little bit about it, and I thought it would be a good platform to try to port what he had done onto. And the reason I say that is because TradingView does charting like a lot of other chart programs like stockcharts.com, MarketSmith, etc. One of our polling questions was to ask how many people on the call were familiar with TradingView or actually using it today. That would have given me a better idea of how to talk to you about TradingView, because part of my goal is to introduce it to the people that aren't familiar with it, but not go overboard to the point where the people that are using it and familiar with it are bored to tears. But anyway, the reason it's a particularly good platform for trying to do this is that besides charting, they've created a way of writing programs. It's called Pine Code. And there are a lot of programmers, or they call them Pine Coders, in the TradingView community. These folks create custom indicators, custom strategies, and they call them Pine scripts that augment a lot of the standard stuff that you see in many of the other charting programs, like a standard full stochastics, as an example. There might be a number of different strategies built around that, different indicators that are different from what we would consider the normal type of indicator and parameters that could be used with that type of indicator that can be used in TradingView. So we had an opportunity to look at, and I had an opportunity to work with a Pine Code author or programmer. I worked with him to help me retrace a lot of things that Floyd had done as far as his rules and come up with a strategy on TradingView that we could use on a day-to-day basis and give us signals for when to buy, when to sell, and a strategy that could even be connected up for automatic trading at one point. I haven't gotten there yet, but I understand from the program I've been working with that it's certainly doable, and it's a direction that I think I'm going to go myself. But I just wanted to give you a sense of why TradingView, and I'm not trying to sell it, I'm not trying to hype it or anything like that. It just happens to be a really good platform for what we're trying to do here.
Yeah, and I agree.
We,
This is Rick. I'm agreeing with you. As the person who did spreadsheet, I think all three of us have found that spreadsheet with over 200,000 formulas in it is stretching its limits, and it kind of errors out once in a while. So it's a perfect time to switch over to it. What I found to be a really robust platform is TradingView. Its programming capabilities are far beyond Thinkorswim and what we can do with the Excel spreadsheet.
I know that Floyd sent out in his announcement about the meeting the ability to use the strategy on a free version of TradingView. TradingView has multiple versions. A very basic version is free, and then they have different levels of paid versions. We actually tried running the strategy, which technically we knew would work on the platform. We tried running it on the free version, but it came up short on what we expected as far as results. We found that the free version, TradingView, pretty much truncates the amount of historical bars and historical data that you get, where it's easier to use on the paid versions. So the bottom line is the strategy, we're going to tell you how you can get it tonight to try it out. It may not provide the results that you'd like on a free version. You may have to go to a paid version. The good news is they have a 30-day free trial. So you can always do that. And if you like it, continue with it. If you don't, you won't have to pay anything.
Gary, a couple of people have indicated that they're using TradingView, and one person asked, does PineScript have access to auction prices?
From what I understand, I don't know the answer to that. I don't do option trading, so I'm not quite sure how to answer that. I've only used TradingView for stock prices.
And then George is asking, can any of this be done on MarketSmith? And the answer, George, is no.
We'll show you why. We're going to give you a little demo of this. We're going to show you some slides, etc. And that'll give you a better sense of what's involved here and why. But I'm going to bring up a presentation. If Rick, did anything you wanted to add before I move forward?
Yeah, I just wanted to say, yeah, I've only been using TradingView for a couple of weeks, but I've plunged in. What I remember reading that they don't do option prices.
Okay.
They have options carried on the platform.
Thank you, Rick.
Really do that. Somebody mentioned that TradingView offers big discount on Black Friday. Yes, I took that myself. We got the premium version on the Black Friday sale. That was excellent discount. But as George says, it's that sale was over too.
We can see your screen just fine, Gary.
Okay, there we go.
And where are you based out of right now?
I am in the Phoenix, Arizona area, north side of Phoenix in one of the suburbs.
Yeah, go ahead then.
Okay, appreciate it. We've kind of already gone over the a little bit of a history, and I've given you a short intro already to TradingView. We're going to show you what this strategy has done over a 6-year, 8-month period, what the results were, and how that compares to things like buy and hold, and how it might compare, looking at breaking it down to an annual basis, a yearly basis. So if you start this strategy at the beginning of this year, or you start at the beginning of this coming year, and give you a sense of what some of the types of things might happen, what kind of results might happen over a 1-year period based on the past 6, 7 years. Okay. We also have the ability with this program of applying a secondary indicator. So in addition to using the program stochastics that we put into this to mimic the rules that...
Or did Gary freeze up? Or did I freeze up?
You still there, Gary?
He froze up.
I can hear you, Rick.
I could see Maureen moving a little bit there too. So I know I'm alive, but
It's just Gary.
he lost his internet connection.
And while we're waiting, I see a notice here that someone is speculating that maybe Marcus Smith is going to have an improved version coming out in about 6 months or so. I sure hope so. I'd made multiple recommendations to Marcus Smith on how to improve their program. So maybe Gary may be having to dial back in.
Yeah.
So the nice thing about it is that Gary took the time on his own and has exactly duplicated the work that I've done, and then Rick did with his spreadsheet program. Rick's program has like 200,000 equations in it. Gary hired a programmer to help him. We did a bunch of back testing and checking, and he now, using TradingView, which we hope to share with each of you so you can do your own back testing. The cool part about it is, based on the rules that we have in there now, it shows you every single buy and sell signal. And the last buy signal, I think, was November 3rd. And if you download TradingView, which Gary is going to show us how to do tonight, and you can get a 30-day free trial. Within those 30 days, if we get a sell signal on TQQQ, you will see it right there on your TradingView platform. And if you like it, you can choose to subscribe to it. They have 4 different levels. One is free, but the one that you pay for is about, I think, $130 or $40 a year, which isn't a whole lot of money. I think Marcus Smith is like $1,400 a year. And their premium version is higher than that. And so hopefully we get Gary back on. If Gary doesn't get on, I've got his slides and we can go through and ad lib for Gary with Rick's help, but we'll give him a minute to get on with this. I haven't received any text messages from him yet.
I'm keeping an eye out for him in the participant list, but I haven't seen him yet.
On my side, everything is still strong. The other, maybe what I'll do is I can show you while we're waiting for him.
I'm going to go on mute, Floyd. I'm going to call him, see if he's got full power out or
Okay.
what the situation is, and see if I can reach him.
Floyd, I had a question. This is Richard May.
Yes, Richard.
Yeah, first of all, good evening, and thanks for all of your help and support. On the TradingView, based on your email last week, I went ahead and got into TradingView, and I signed up for a 30-day free system, like you said, and there are 3 or 4. There's the free, and then there's the basic, and then there's the advanced, and then there's very advanced. I just decided to go with advanced. I haven't paid anything yet. I think it's like $300 a year. I was just wondering from your experience or from Gary's experience, if the basic would work fine, or it sounds like that the free one does not work, but which one is the one that a person needs to sign up for?
The free one works. It just didn't give all the same buy and sell signals, because I think the free ones are limited to how much data it can handle. But I think I haven't been able to test this real time, but maybe you can be our guinea pig for it, Richard. I believe the package you signed up for, now that you have a username, you're going to hear in Gary's presentation that if you email him your username, he's going to send you a link that will give you all of the programming that's been done. So your version of TradingView will have the stochastics program loaded in, and you'll get the same exact buy and sell signals that Rick's program was giving us. So go ahead, Rick.
I just talked to Gary, and he's in the middle of trying to get reconnected. He thinks he'll be on in a few minutes.
Okay, sounds great.
A little dependent on technology.
So the other thing I would show you while we're waiting for him is I've got a version, let me share, of, let's see, I think it's this one. So can you see my Thinkorswim screen?
Yes.
So this is Thinkorswim that's got stochastics programmed in. This is for TQQQ, and you can see our last buy signal was over here. That's November 3rd. I happened to buy it on November 1st. For 2023, these are all the buy and sell signals. We have two different stochastics blocks shown in Thinkorswim. The top set of stochastics is called MarketSmith stochastics. It's different than MarketSmith uses 1455. We got this programmed at a time unit of 5. And then based on the fast and slow, I have 533. So we're using this top one to give us our signals for TQQ. And then when we flip over to SOX, we end up using the bottom set of stochastics, which are called full stochastics. They're almost the same, but there's subtle little differences. They look the same, but believe me, they're not. It's surprising to me how much difference we get if we use one or the other. With SOXL, if we use full stochastics, you can see this week has been a huge up bar, and SQQ is as high as it's ever been since way over here, maybe in April or so. I'm just showing you that I like the TradingView one fine, but this Thinkorswim is a free program. If you are a Schwab customer, you can follow the stochastic buy and sell rules with Thinkorswim also, and we'll just wait and see when
Gary's back.
is
Here.
you're out. Okay.
Floyd, can I ask a quick question? Were you able to program those buy and sell text on the chart on your manually inserted?
I manually inserted those.
Okay.
There may be a way to do it, but if there is, I don't know. Go ahead, Gary, if you're connected.
Are you disabled the participant screen sharing, Floyd?
Do I need to put you back on as a co-host?
Yeah, I think you do.
Yeah.
Let me see. Make co-host. Okay, I got you on, buddy.
Great.
So you just had an internet blowout?
Yeah, it just dropped for some reason. It surprised the heck out of me. It's been a long time since that's happened, you know?
Yes, but it's sort of humorous. When Gary and I were doing a Zoom call about 3 or 4 hours ago, I dropped out.
It's funny how that happens.
So go ahead and take us to your slides there.
Okay, here we go. All right. Great. All right. So this is a screenshot of a TradingView chart.
Oh, hey, Gary, one of our guys mentioned to me that when he saw my announcement about the meeting, he signed up for TradingView and got a 30-day trial on the package just above the free package. So we have somebody ready to get your link so he can connect and see if it works out just fine.
Terrific. That's great. Okay. So we've got down here at the bottom, this is where we've put in our new indicator, our strategy. We call it the Stochastics LETF strategy. And I always put a date on these. We do fairly frequent changes. This is a strategy that is still in the making. We hope to continually improve on it, make it better. Occasionally, we'll find out that we've got a little mishap or a bug that we need to clean up. But in any case, we'll provide a new date with the strategy when we come out with it. The strategy is down here below. And what we have is a chart that is a daily chart. And through the chart, we have a moving average line. On the left-hand side, we show where we made a buy. And then the chart had a prior day stop. They had a really bad day and it dropped below the parameter we set for a stop. So it sold and then got another buy signal here, bought again, and hit a trailing exit. Trailing exit is a parameter we set based on the highest point, prior point that the stock went up, or the ETF in this case went up, that it could drop below before it got stopped out. Then we did a re-enter buy to run on up. You'll see this throughout the price chart. Whenever you do a back test, it'll show you the various buys and sells, etc. You also see it down here in the strategy where we've got a buy indicator and a rebuy indicator. We don't have sells down here right now. We will probably put in another indicator down here to indicate a sell as well. It's one of the things we talked about doing in addition to having the sell signals up above. On the far right, we have a little box that gives us a buy and hold computation as far as a percentage and a dollar amount. Now, that's based on whatever buy and hold period we have set in our settings for this strategy. The strategy will have, by the name here, you'll see a little gear icon that allows us to get a pop-up for settings. That's where we can put in the start date and the end date for a backtest period.
Gary, there's a question on what moving average is that purple line?
It's 21.
Yeah, that was the next thing I was going to point out. In this box above, we actually did this strategy for a 6-year, 8-month period with no moving average applied. We had a really strong profit level, $247,000 based on a $10,000 initial investment using 31 closed trades. The moving average here is a 21-day EMA. And I put this in because a lot of traders like to use a 21-day EMA as a reasonably good indicator of when it's maybe a little more aggressive with your buys, and as an indicator where if it falls below, you want to be a little more cautious with your buys and perhaps even go to a cash type position. But the interesting thing is that if you use a 21-day moving average indicator, it only gives you 27 closed trades over the same period. And look at the results, $49,000 as opposed to $247,000. And the interesting thing there too is besides it being a smaller profit, the drawdown is still the same, whether we use the moving average or not. You still got a max drawdown of over 47%. Drawdown is the highest level that the chart has gone up to, or the price of the stock has gone up to, and then where it would drop down to before it's actually sold. So that's at 47%. It's not necessarily a loss amount or a stop amount. Next, I'm going to go back for 1 second. On this chart, underneath this strategy down here, there's another pane below this that's called a strategy tester. And you'll see that in another screenshot I'm going to pull up, but that's what I'm showing you on this next slide. This is a screenshot from the strategy tester. So your chart would be right above this. This gives you 4 different tabs: an overview tab, which we're looking at right now, a performance summary, a list of all the trades that took place, and the properties that were used, a condensed version of the parameters that were used in establishing the backtest. Numbered 1 through 31. These are all the different trades that took place over the 6-year, 8-month period. The green line is the net profit generated over that period. The blue line is the buy and hold, what buy and hold would have done. These purple kind of rectangular boxes here are the drawdown that you would experience. As far as the strategy is concerned, it's one of the weak points because we can have some pretty significant drawdowns with the strategy. And I'll show you what those look like here in that. I mentioned that in our strategy, we had a way of bringing up settings to change parameters. Here's the little gearbox. You'd press on that, and this would pop up, the screen here. It would give you 4 tabs: inputs, properties, style, and visibility. These are the typical inputs that we would use to generate the results that I just showed you. We have some rules that allow us to enter the next day based on a stop out. We've said it's going to be a long only type strategy as opposed to a long and short or just a short. We have those as variables, but we just haven't gotten there yet. Right now, we're just working on long strategy. We've got a trailing stop set and a stop loss set of 18.1% on that trailing stop. I mentioned that prior date close stop before. In this case, it's a 13% stop.
Gary, the reason we put in an 18.1% trailing stop and a 13% day close is using Rick's spreadsheet model. I went through and did several hundred back tests, and I used as many different variables as I could related to stop losses and other factors. After using Rick's program, I can do a back test in about 2 or 3 seconds. Each back test was taking maybe a couple of hours because of all the number of calculations. And so with Rick's program, I was able to optimize the values that Gary's showing you here in terms of the stop losses and where we would have the overbought and oversold condition. Gary is taking the values that Rick and I came up with and inserted them into TradingView. Right, Gary?
That's correct, into a custom program that allows us to take those values and manipulate them and change them if we want to try to get better results based on different combinations.
I had a question for Floyd on this. Floyd, these stop loss and tick and previous day close stop, are these rules in your current rule sheet?
Yes.
They are. Okay.
Yes. In the presentation that I made in September, we showed those values for the basic strategy, and then I think we had a different set of rules if someone was willing to tolerate significant increased number of trades. But those are the rules that I presented back in September. And there was a comment here that someone said he thought we were using a weekly chart. Yes, the stochastic values are based on weekly values. We're just happening to show the daily values on the chart, but typically buy and sell decisions are made on Fridays unless we have a gap down and we get stopped out. But on normal trading, the decisions are on Fridays.
One thing I wanted to point out is on these stop loss values, if you think about the 3 times leveraged ETF, these are necessarily large stop loss values. If you're buying an individual stock and using a 7 or 8% stop loss as a relatively normal parameter, if you had 3 times the leverage on that, getting up to 18 to 21% for stop loss isn't that unreasonable. So it's just something to think about when you look at these things from a relative perspective. As Floyd mentioned, the chart we've been showing is a daily chart with the candles, but we are running a weekly stochastics on it. That's why you see the stair-step type of picture. Each one of these represents a week period of time. This is another week, that's another week, etc. on this daily chart.
Those stochastic values are calculated based on the Friday closing price each week.
So you can see the little graph moves on Fridays. That's like when that chart updates.
At the very bottom, we've got the stochastic settings here that we typically use, the 533 for now. But we've got that ability to add another indicator, so we can add a moving average, and we can have that other indicator set to make the strategy work based on whether the indicator is above or below the price, or it's above or below a specific level. So what I'm getting at is, besides a moving average, you could use other indicators in this strategy, such as like an RSI indicator, a MACD, or something like that, where you're looking at a specific level to help you decide how you might want to filter buys. And I'll show you more of that a little bit later on. And then below that is the backtest period, a start backtest date and end date. And that's pretty much it for this particular tab.
One of the powerful things is that if a good number of you end up doing a trial subscription to TradingView, and then if you like it, you can sign up and buy it. But if we have a whole bunch of you out there doing back tests and maybe looking at different indicators, one of you may just come up with a strategy that still produces very high returns, but has less of a drawdown. And please, if you're doing back testing and trying different parameters, if you find something better, my request is please share.
The second tab is properties. In this particular tab, this is where we can set our initial capital that we're going to work with. In this case, it's $10,000. It doesn't have to be U.S. currency. It can be another denomination, another country as currency. Our order size can be contracts, or in this case, we're signaling out 100% of equity. So there's a number of ways that we can do this. It gives you a lot of flexibility. We also have the ability to pyramid orders. If we set this to 2 instead of 1, it would take a buy, and then if it doesn't get a sell signal of any kind, but sees another buy signal, it'll buy a second time. And then when it gets a sell signal, it'll sell that first and second buy together. We can set different parameters for commission, things like slippage, and even margin. We've got this set on filling orders and calculating based on the bar close. That's going to be a normal pretty much all the time. We may be coming up with some cases, though, where we want to use a bar magnifier, and if we get into that, we'll explain it to you later on. The third tab, I'm hitting the space bar, but it's not advancing. Let me try page down. Now we're here.
Maybe stop sharing and then share again.
Oh my God, there we just went up 2.
Murphy's Law.
Advance 2 instead of 1. Hold on a second. I'm going to back out and do it this way. Okay. So this is the next one, the style version, current slide. Here we go. The style here just gives you the ability to show different colors, different shapes, etc. Right now, we've got the lines down here, the overbought and the oversold line set at 37 and 10. These normally called, I think, is 80 and 20. But since we're using 37 for sells and buys and sells above 10, it's usually a good idea to set your overbought, oversold levels so it's easy to visualize down here at the bottom. And I'm going to change the pointer option to laser pointer again. The last one is just visibility. We can set this so we can only see this on specific chart time frames. So if you only wanted to see this on a day chart or an intermediate chart for hours or minutes or for months, etc. You can set that. But generally, you just leave this so it's set on everything.
Just to give you a time check, we've got about 30 minutes to go.
Okay. We did a 21-day moving average when I initially showed this chart to you. I want to give you a sense for what happens if you apply a 50-day moving average to it. If we apply a 50-day moving average, which, is commonly used by a lot of people, if we use an SMA, we're down to 18 trades, and an EMA down to 57 trades. The performance is significantly less again.
19 trades.
Just a little bit over $50,000 on each. And we still have pretty stiff drawdowns. And that's with a 50-day moving average. If we move to a 100-day moving average, the teal line here, you can see how that impacts the trades here. We get better results. We end up with about 88,000 and the tolerable drawdown is a little over 21%, holding 18 trades over the time period. We're getting a little bit closer. This one, we're showing a 140-day moving average in the red and a 150-day in the blue. The 140-day gives us a $91,000 return. Still a far cry from $247,000, but a pretty significant return for about a 6-year period on a $10,000 investment. And like I said, a fairly reasonable drawdown as well. If we move up to a 50-day, 150-day EMA, it goes down to $78,000. What I found with experimenting with the moving averages is that we could take the SMA up to about 200 days and still get the same results, about 91,000 as far as performance. But if we did that with a EMA, anything over, about 148, 149, we get up to 150 and starts cutting back on performance. So I decided to start using the strategy. If I'm going to use a moving average to check results, I typically use a 140-day. So that way I don't have to particularly remember whether I need an EMA or SMA moving average. It just makes life simpler for me. This is a spreadsheet showing the statistical results of doing the strategy over that 6-year, 8-month period, the profitability compared to what happened using the moving average to filter out buys and reduce our risk, mitigate pain, etc. Drawdown, 47% here, but only 21%, a little bit over 21% with the moving average. Buy and hold, 636% versus 2,473%. Pretty significant. The interesting thing is that using the moving average, we beat buy and hold as well. 917 versus 669%. The largest losing trade, though, was 18% here, $33,000. It might seem like a very large amount, but you got to remember, we are talking about a very large amount of return here, too. Same percentage here, 18%. But of course, smaller return, smaller loss. These are all things to keep in mind when you're looking at using the strategy. Also, the other thing here is 19 trades versus 31 trades.
And those are round trip trades, meaning they're paired.
Yes.
That's
and
19
buy and
buys
sell.
and sells, 31 buys and sells.
Correct. So what I'm going to do is skip the slide view so we can move this along faster and just do it this way if that's okay with you. Okay, I lost my pointer too, but that's all right. All right, so here I'm starting to break it down on a year-by-year basis. This is 2017. In 2017, we're comparing it over a 1-year period from January of 17 to February of 18. I tried to keep these as close as I could to a 1-year period, but I also tried to work it so that we had a logical buy in the beginning of the year and a logical sell either right at the end of the year or very early in the following year. In 2017, we had a pretty good performance, about 81%, as opposed to a buy and hold of 123%. Keep in mind, when you do buy and hold, you've got these huge dips that can be pretty painful. The 140-day moving average gave us about the same return, 81%. So whether we did this with or without the moving average, we would have gotten the same result.
Frank is asking, why are the buy and hold numbers different? And the reason they're different, Frank, is the previous slide was for a 6 to 7 year period. This slide is for a 1 year period.
Exactly. We start the buy and hold period at the very first trade within the backtest period. So if the first trade is January 10th of the year, that's when we start calculating the buy and hold. And we run that until the end date selected for the backtest strategy. That may not necessarily be the same end date, though, that we have completed our last trade. Okay? In this particular case, we went out to February of 2016, which is the end of the last trade. I think the last trade was on the 5th of 2018. But if we had had a trailing exit, let's say it then here instead, and ended the back test over here, we'd be calculating the buy and hold up to the end of the back test period. So this is what it looks like in a statistical form. Like I said, very similar performance between the two, whether we use the moving average or not. That applies to the max drawdown. The buy and hold return was virtually the same as well. Here, we only had 3 closed trades for the entire year, 3 round-trip trades. This next one's for 2018. It wasn't that great of a year. We ended up with almost a 7% loss using the strategy, but buy and hold had a 30% loss. They came out with a lot more pain than we did using the strategy. Interesting thing here is that using the 140-day moving average to mitigate some of this downside, we had a 16% gain, which was pretty nice. Buy and hold loss 38.8% here versus R6, and 16, almost 17% gain here on the moving averages. In this case, we had 6 closed trades altogether, and the largest losing trade was only about 12%, a little bit over 12% on the strategy, and about 7.8% on the moving average strategy version. 2019 was a pretty good year. We ended up doing about 118%. Buy and hold did even better at 142. But if you're doing buy and hold, can you imagine trying to hold through these dips? That would be pretty hard to do. But if you did, you'd have a nice return, 142%. Moving average eliminated some of these buys, and because of that, we only had a 43% return. We had 4 closed trades altogether, and the largest losing trade was only 8.7%. Overall, I think we did pretty good that year. Everybody remembers 2020, right? With the big dip from COVID. This would have been tough to sit through on a buy and hold. Maybe some, if you're holding a mutual fund, you did, but if you're doing individual stocks, I kind of doubt it. We ended up doing very well with the strategy for 2020, about 185% return. And this hugely beat the buy and hold strategy by 83%. Moving average, though, again, cut out some of this. And because of that, we only had about a 43% return with moving average. Here's the numbers. Max drawdown, just 18% on either one of these, which isn't too bad. Not too hard to sit through. Largest losing trade was the 18%. So for a 185% return, that's pretty good. Here's 2021. Now, this was an interesting year. And the reason I say that is you see that the strategy came out almost flat with a little over a 3% loss. You got to wonder why, because you look at this big uptrend here and then this other uptrend here, and you go, well, those look like they should have made a lot of money. Well, that's true, but the problem was in the very beginning of the year, we had 3 losses that were pretty significant losses early on. And if you're starting out with $10,000 and you've got, several 13 or 18% losses in a row, they can take a strong bite out of that. Because of that, when you start getting these uptrends, you're starting out at a lot lower dollar value. So it takes a lot longer to start compounding your returns and getting returns in these upswings. If you take early losses, it's going to hurt you more with this strategy, trying to get it rolling later on in the year.
So Gary, Pat's asking a question. With using a moving average, you are skipping a buy signal under the average. Do you buy when it moves above the average or wait until the next signal?
You wait until the next signal.
With a moving average, are you selling when the LETF moves below the moving average?
Yeah, the sell signals are not affected by the moving average. So if you already own the stock and it moves below the moving average, that's fine. You're either going to exit based on a trailing stop loss, a prior day stop loss, or a normal exit based on a crossover with stochastics. That good, Floyd?
You got about 20 minutes.
Here's the numbers. This is 2022. Everybody remembers 2022, not very long ago. Ugly year, one many of us want to forget. Strategy, though, actually only had a little bit over 7% loss. Buy and hold would have been murdered with a 67% loss. The 140-day moving average would have kept you out of this entirely. You would not have been in any trades in 2022 using this strategy. And here's how it looks. A lot of goose eggs in the right there. 2023. Now, this is only going up to the end of August of 23. Really good strategy return, 75%. Buy and hold. It still did a little bit better, but again, some pretty significant dips within the buy and hold area there.
Hey, Gary, we got a question from Watson. He said, "Can you please define what are 1, a trailing exit, 2, K-line crossover, overbought exit, 3, cross under exit?"
Okay, it'd be easier if I can show it too.
Maybe go to your original 6-year chart.
We had our cross under exit, the trailing exit. What was the only one to here?
It said trailing exit, K-line cross under, and cross under exit. So I think the cross under is when the stochastics cross.
You have a fast line down here, the blue line, and that's coming down, and it's crossing over the slow line, which is the orange line. As that comes down, that's saying that we're going to generate a sell signal if that line gets all the way down to the 37 overbought level or below. Okay, in this case, it got down there, and that's how we generated that cross under exit. Okay, that's what generated that. The trailing exit is based on that parameter that we set earlier in the input selection, saying that if we had a trailing stop loss of 18.1%, we would exit the trade.
Yourself, does that answer your question?
Hi, Dan. Hi, Floyd. Yeah, these are pretty identical to your rules, right?
Well, these are based on my rules.
Okay. I think, yeah, it's just that I think there is a nomenclature for that. Okay. And what about the third one? I'll watch the recording.
Okay, thank you. Just want to make sure we're being responsive to everybody the best we can.
Thank you.
All right. So we're going to go into a strategy demo. One of the things with this is that we've created this strategy on TradingView, and in order to make it available, we have to do it by what's called an invite-only process. That means that it's not viewable by other people that are using the TradingView platform. They can't see that this is available. They don't know anything about it. The only people that know about it are you folks and anyone else that we happen to tell, because it's by invitation only. In order to get access to it, when you sign up for TradingView, I need you to send me an email with your username. As part of the sign up process, they will have you create or give you a username. And I need that in order to authorize your use of the strategy on TradingView. When I do that, for now, I'm only going to enable those for a 30-day period. And the reason I'm saying that is because this is moving fast, it's changing quickly, and I'm not sure where we're going to be in 30 days. So I'd like to reevaluate things after that period, but initially we'll have a 30-day shot at using it. It's on a time basis with the authorization, so it'll just stop making it available after that 30 days. Once you send me that email, I will authorize you based on your username and send you an email back letting you know that you've received the authorization. At that point, you'll be able to go to the Indicators tab on TradingView, select it, and then select a section that'll say Invite Only in that menu. And there you'll be able to select the strategy. And I will try to show you that as best I can here in the demo. Okay. So let me get over to share again. There we go. I'm going to change the sharing for a minute.
Someone's asking us what version of TradingView is needed.
TradingView is always up to date, but you can use either the web version or the desktop version. Personally, I like the desktop version. I think it's easier to work with, but the web version works fine as well. This is the web page for TradingView. When you first go here, you're simply going to click on the Get Started, and that's going to put you through the process to get signed up for TradingView. As part of that process, when you sign up, make sure you're looking at monthly pricing. I would recommend that. Otherwise, if you sign up for a paid program, that they're going to hit you with an annual type price. So if it's the Essential, it's over $155 a year, or the Plus, almost $300 a year. Make sure this is set on monthly. Look at the differences between the versions you can get. If you toggle down further, you can see the basic free version. It's very minimal, allowing you just one saved chart layout, one chart per tab. TradingView works a little bit similar to a browser where you can have multiple tabs with multiple charts and multiple stocks, different chart layouts, day next to week, intraday next to daily, etc. There's a lot of different options available, but you don't get a lot of that when you choose the free version. It's very limited on what you have available. But it's usable and it's worthwhile to take a look at, regardless of what you end up doing. Once you sign up.
But Gary, you're recommending they sign up for a free 30-day trial on Essential, is that right?
Yes, I would recommend that, because when we did the testing on the basic free version, the results did not come out anywhere near what we expected. So the way to get a better picture of what's going on is to sign up for the Essential version, which is a relatively small monthly dollar amount. Again, make sure it's monthly. But after the first 30 days, they will ask you for a credit card number, but they won't charge you until the end of the 30 days. That's when they charge you. If you cancel before then, you won't have to pay anything. That would give you 30 days to look at it, to try it out, etc. And that's about the length of time you're going to have with the strategy initially anyway. So that's what we would recommend.
Over the Christmas holidays, if you have some time off, and you want to be sure and do things with the family or whatever, but if you get a little bit of free time, you can run in there and do a lot of testing using TradingView. A couple of people have asked, will they be able to see
The actual code, no, that's not visible to anybody. It's hidden by TradingView, and we can make it available through TradingView. I'm sorry.
Okay, what else you got?
1 second. Just want to get back here for a minute. When you sign into this initially, your actual first screen might look something like this. Go up to the menu selection, click on products, and go to super charts. That will bring up a chart with pricing on it. To change the stock or ETF that you want to look at, it's just a matter of typing in. Right now, in the top left, we have TQQQ. We could type SOXL and hit return. Now it's changed to SOXL. We have it set for a day time frame, and we're using candlesticks. Along the left are drawing tools. Along the right are tools for doing things like watch lists, alerts. There's a lot of variables here that I just don't have time to get into right now, but I want to give you a sense of how this was laid out.
When what their username, and you send them a link.
That's what I was going to go to right now, Floyd.
Okay, good. Because then all the parameters are automatically loaded, right?
Yeah, that's what I'm going to right now. When I send you an email back saying that you are authorized, all you need to do is bring up this chart, go up here to where it says indicators, metrics, and strategies, click on that. And you'll see a fifth line item down here underneath community scripts that will say invite only. You click on that, and over here on this side, you'll see the name of the script that we're providing to you to use. You click on that, and that will automatically be put in your chart. That's all there is to it.
You still with us?
Right. Just give me 1 more second.
Okay. Want to make sure you weren't frozen up against.
No, I haven't frozen, so I'm going to add myself on that, add access, and I'm going to apply. And now I am authorized, so now I can go back. Okay, I just authorized this free version of TradingView that I signed up for, and I'm going to go up here, click on this again. I haven't gotten it yet. Hold on. I know it is wrong. I just need to sign out and sign back in. Should have brought it up. Sorry, folks. I was expecting to see that other line down here.
Maybe refresh the web page or reload the site. That may have cached those values.
Here it is.
There you go.
Invite only scripts right down here. So I click on that, and here's the strategy. I click on that, then I close this, and you'll see it down here. Now the strategy is on the chart. To change the strategy settings, you go to that gear icon I mentioned, and here are the 4 tabs I talked about. We're not going to use that. That's fine for now. Leave that open. There you go to 100% of equity. Take off on every tick and keep it on bar close. Style 37 and 10. And one last thing, once you get these set the way you want them, down below, you see where it says in the bottom left here, defaults? You can set it to the defaults that you just set. And next time you bring this up, if you close this out, next time you bring it up, it'll provide you with the same settings that you just created. So that becomes your default setting. If you want to remove the strategy, it's just a matter of clicking the X to remove it. If you want to do this with the moving average indicators, there's one called moving averages or all Time Frames by John Mucha. I'd recommend putting this in your favorites. You click on that far right icon and toggle down. You can add this to your favorite indicators. I can see this now in my favorites. Moving averages for all time frames. I've already added it to my chart. There are the different moving averages. The gear icon says moving averages for intraday time frames, daily moving averages, weekly, and you can show a weekly moving average on a daytime chart. You just select which moving average you want to show up on the chart. If you've got a daytime chart, only the moving averages they're showing here on the daily moving averages will show up. So I've only got the 21 day selected, so that's the only one that's going to show up. If I add the 50-day, that'll bring in the 50-day moving average. The nice thing is when you make changes, it's almost instantaneous. I could even show the weekly moving average, say a 10-week moving average. As an example, you see how it's stair-stepped? That's because it's a weekly average on a daily chart. Anyway, I found it to be a convenient moving average indicator to use. Once you get the stochastic set up the way you want, you got your strategy on it, you got your moving average on it, you go up here and you can rename this to strategy, save it, and then anytime you bring this up again, all you have to do is click the drop down and select strategy, and it'll come up. This particular chart with these moving averages on it and stochastic strategy.
So Gary, the one thing I don't think you've shown anyone yet is how you can bring up the table of the buy and sells.
Oh, okay. All right. This is the strategy tester down here that I mentioned before, down here below. And here's your overview, your performance summary, your list of trades, and just a matter of toggling down the properties that were used to create it.
So that list will show you every single trade and what caused the, like if it's a sell, what caused the sell to occur.
So it'll tell you if it was a cross under exit, a normal cross under, trailing exit, that kind of thing. It'll also tell you for each trade how profitable it was or how much of a loss you had. You can download this into a comma delimited spreadsheet and bring it up in Excel as well. And you can also change settings from here too.
Gary, we're just about out of time. Before I open it up to questions, because I imagine there's going to be a few questions, is there any other key point that you wanted to make?
I think that we've covered a lot, and this is the kind of thing where you almost have to try it and use it, play with it a little bit, and try to get comfortable and familiar with it. Once you do that for a week or so, it's just so much easier. And you're probably going to have a lot more questions after that.
The cool thing about it is on the 30-day trial, or if you want to pay for a second month, I think you've got to ask Gary to give you a little more time. You can see that on November 3rd, there's a buy signal. It's that blue arrow right there with the letter B on the stochastic chart. So that's the last time we had a decision to make. Potentially in the next 30 days or so, we're going to get a sell signal, and it will automatically place that on this chart for you. And if you actively have an investment, in this particular case for TQQ, and if you're waiting for the stochastic strategy to give you a sell signal, this program will absolutely give it to you. Now you can potentially anticipate if it looks like it's going to happen, and you may want to get in early, but if you want to wait until you get the signal from TradingView, it will absolutely locate it on the chart for you on when you should make that sell. Our strategy is if you have $100,000 in TQQ, when you get the sell signal, you sell the entire holding and wait until the next buy signal. So let's open it up to questions.
The last slide in here is, besides the address for TradingView, there's a lot of good stuff on YouTube as far as learning TradingView. I've tried to provide you with some tutorial type stuff. TradingView even has one on major tips that'll help you with the program. So look at some of this stuff, and I think that'll help you. There's one specifically on strategy tester basics and getting to know and understand the strategy tester. One thing that I really think is cool about TradingView that has helped me, besides backtesting to try to understand what something has done in the past that might impact what we're doing in the future, the other thing that I found very helpful is practicing my trades. TradingView has a feature they call bar replay that allows you to go back in time and replay bars for a particular stock or ETF, moving forward at a pace that suits you. It could be based on every time you hit the space bar, or every 30 seconds, or every minute. You get to set all that. But then you can also make specific trades or sells and keep track of it within TradingView. And it'll give you an idea of how you're doing. So I found that to be extremely valuable tool as far as improving my expertise with handling trades and understanding when to enter and when to get out of a particular stock. So
Just unmute yourself if you have a question, and let's see if we can answer some of them.
Hey, Gary, this is Frank. I had that question about the percent on the buy and hold. I think it was actually the table that was on slide 13. One was like 639, and the other one was like 669. So I didn't know if that was a typo or there was a difference.
is this one.
Oh, there it is.
And what were you looking at?
Under the buy and hold, the
Right.
percentage on the one is 636 and the other 669. Shouldn't those all be the same numbers, or why are those different?
It's just whether starting or ending date, they're off by 1 or 2 days, maybe.
Would vary based on the starting date. And often the moving average will provide you with a different starting date than you would necessarily have on the strategy itself.
Oh, okay.
But when you're saying buy and hold, isn't it all buy and hold and you're not using the strategy?
Well,
Am I missing
Yeah, but
something?
we're calculating from the very first to buy as a start.
All right.
For example, if you're looking at 2023 on the buy and hold strategy, you buy on January 2nd and you hold it until today. Using strategy, you may not buy until 5, 10, or 20 days later, depending on when you get the first buy signal.
All right, I've got you. I didn't realize there was a condition in there for the buy and hold.
Yes.
If we had the buy and hold start on the same day as the strategy buy, then the numbers would be exactly the same.
Yeah. So the moving average is going to typically impact it. But again, it depends on the action of the stock or the ETF in that particular year.
I think it's just all theoretical. I don't think any of us are going to do a long-term buy and hold with a leveraged ETF, but we put it in there just to show it as a comparison on how does the strategy perform versus if someone did just do a buy and hold. Any other question out there?
Floyd, Watson again. I just want to confirm one thing. In your sell rules, as far as the momentum lines are concerned, there's only the weekly fast line if it drops below the slow line, and as long as the fast line is lower than the overbought line. That's the only sell rule as far as the stochastics crossover is concerned. Am I right?
You have to have the fast line go through the slow line, and the fast line has to be lower than that overbought line. In this particular case, I think it's set at 37.
Got it.
That's a variable you can play with and you can move that around. But from our back testing experience, where it says 37, if you made that 50, instead of making $247,000, you might only make $200,000. That's the biggest surprise that occurred to me when I got Rick's spreadsheet and I started doing hundreds of back tests. I had no idea that the strategy would perform better if we had that overbought line all the way down to 37. I would have never guessed that. And Rick's program gave me the power of being able to discover that.
Yeah.
But you can easily go through, once you have this loaded on your computer, you can make that 37, you can make that 40, you can make it 33, you can do anything you want and see what it does to the total value at the end of the back test.
Remember, I showed the moving averages, how when I selected one of the moving averages, it would instantaneously change and show up on the chart. The same thing applies when we have that input selection up for the strategy. So if you have that input up and you can see the strategy tester below as far as results, bring that window up a little bit so you can see the results, and then have the input window as well. You can change those different input settings and almost immediately see the changes on the strategy tester as far as what the net profit is, max drawdown, and all those variables. It's pretty much instantaneously available. So it makes it really nice and quick for getting feedback on whether or not you're going the right direction with a particular line. Like maybe you're exploring what happens if you move the overbought line up gradually. So you're moving it up one at a time to 38, 39, 40, etc. You'll get that feedback immediately down below on what's happening with the strategy tester.
Each of you that asked for that link, when you send an email to Rick and he sends you that,
Gary,
you then have the power to go in and start doing your own back testing. What other questions might we have before we sign off here? We got a lot of thank you messages here too.
thank you. I'm going to
Send out the slides and the recording probably Saturday morning. If someone wants Gary's email address, can you put it in the chat?
yeah, sure. One
I
second.
can just put it in there.
Oh, I see it. It's already 19. Pat put it in for us. It's already there. So in the chain, though, you'll see pvtrader@gmail.com. Anyone that wants to jump on this thing right away, you could even go in tonight if you wanted to and sign up for the 30-day free trial. Once you get your username, send that to Gary. He'll send you the link and then you'll be off to the races for 30 days.
Actually, I'm just going to tell you that you've been authorized.
Then when you go down to the authorized only section, you'll see the program.
To the invite only section.
Well, I don't hear any other questions. Thank you so much, Gary. There was a whole lot of material covered there. I'll send the recording out with the slides, probably Saturday morning, maybe Friday night, and then you'll be able to review the presentation. If you have questions, you can send us some emails and we'll attempt to answer those also. But the key thing is, it is a method that does create some drawdown issues, but it is a proven method that if you follow the buy and sell signals, it will help you know when to be invested and when to be in cash when you're trading some of these fast moving exchange traded funds. We're not trying to suggest we have the best system out there, but we think it is a very usable, proven system. I can tell you, I'm personally using the system to make my decisions. And I have confidence that it's been back tested and we make minor tweaks here and there, but it will give you the stochastic signals or the trailing stop signals, for example. That is another tool for you to use as you make your investing decisions, is all I'm trying to say. So we had a lot of people hang in here with us for a long time. We started off with, I think, 51. We still have 41 hanging in there, including some of those crazy people on the East Coast where it's after midnight now. Thank you all for hanging in there with us, and hopefully we provided some value tonight. Best wishes to everybody for a good Christmas and New Year or holidays, depending on how you celebrate. We wish the best for you, for everyone, and thank you. Good night.
Floyd, so somebody wanted the links pasted into the chat, which I just did. Last slide.
I'm in chat though.
I just put them in a second ago.
I don't see it.
Did you send it to meeting group chat?
You might have sent it to a private person only.
Maybe I did that. Hold on a minute.
For everybody else, if you're using a laptop, the 3 buttons at the bottom, you can save the entire chat as a text file.
Meeting group chat. Here we go. Paste and send. That come out okay?
Yep, as an image. Yep.
Perfect.
Oh, Floyd, Steve Sweats was he just left the meeting. He was here with us tonight. That's cool. You know, Steve Sweats leads a lot of meetings.
Rick, did you save all the chats?
I did. Yep.
Okay, thanks. Okay, everybody, have a great evening and best wishes to everybody. We're in a confirmed uptrend and there's a lot of opportunities out there. We don't know how long the uptrend will last. It could last 6 days, 6 weeks, or 6 months. No one knows, but with the Investors Business Daily information we have and with Market Smith, with tools like TradingView, hopefully we can make smarter decisions and take advantage of this trending market in a way that will enhance our accounts. And so this is what we've been waiting for. Basically, for about 2 years, we've been waiting for where we are right now with all the crazy volatility we had, especially in 2022. Hope everyone does well and good evening.
Thank you, everyone. Bye now.
And thank you so much,
Thanks.
Gary. Very excellent presentation.
Thank you.